monitor the other global macro points. And Nikunj, you've got crude oil prices hitting multi-month highs, largely on the back of tightening supplies.
Okay, we start the month of August, and the month of July has been a record month.
Yeah.
The month of July, well, you can look at India and say, okay, July was great, but for global markets, July was even better. So you got to understand that the global construct needs to be understood. We should not analyze India only in isolation. Now, if that is the point we are trying to bring out for our viewers, let's look at the global setup. And the global setup is not shaky, it is not scary, but the macros are threatening to just reverse. How are we establishing that? The 10-year paper, the most important benchmark of which way world thinks inflation is moving, is now nearing 4. Dollar index 102. 102, yes, I said 102. It was sub 100 few days ago. And then crude, which was at 75 to 77 or 75 to 80, suddenly shot up to 85. So if the global macros are shaky, could that have an impact on markets per se? And frankly, if you look at the YTD change, all Indian markets have done, we've actually mapped the MSCI Emerging Market Index. MSCI Emerging Market Index this year, 9.5%, Nifty up 9.5%, Nasdaq is up 44 and S&P is up 19. So folks, you got to ask yourself is that we may assume that we are the only party in the town, but there are a lot of other global markets which surely are partying hard even after the Cinderella moment. So you got to look at the global setup, and the global setup exactly is not looking all that exciting. And for me, that I think is a concern. I would insist and I would believe that if markets have to reverse, it would be a function of global macros, not local factors. Like they say in the market, the sell-off happened because of global macros, and markets always bottom out because of micros. Micros are not a problem. Macros is where you could ask yourself, what's next? And if this trend continues, are we in for a sharpish reversal or a pause in global markets? So if I have to choose the words, I'm not making a case for a reversal. I'm not making a case for a crack or a crash. I'm simply making a case for a pause and a little bit of consolidation.
Okay, pause could be the name of the game when it comes to the month of August, start of a fresh new month, and it seems like that the party in the global markets is just gonna get a bit wobbly, so we'll watch out for that. But back home, it's been lackluster for the last 2 to 3 trading sessions. Yes, over the last hour, yesterday we saw that big rally come by and we managed to close above 19,700, 750 thereabouts. It was heavyweights like Reliance and the IT majors like TCS and Infosys which were doing well in the trading session yesterday. PSUs and metals, they remain among the top gainers, but of course today the cues have turned for metals, so let's see how they perform. Having said that, the broader market outperformance really continues. So the highlight of the market is the vibrancy that we are seeing in terms of the advanced decline ratio, in terms of the various sectors which are performing, but FII continue to remain sellers. For third day on the trot, Nikunj, FIIs have been selling. Yes, the quantum has been coming down, but definitely there is a bit of a change in stance from the FIIs.
So Nisha, look, that go-go activity of $1 billion coming up on a monthly basis, of course, is not the factor which is at play. Now, this is the number which, in a sense, I mean, we've seen big tall bars there. What do we have? We've got one big day, 2 big days actually, and one flat day. Now, let's purely understand the Nifty here, and let's spend a minute. Nifty in last 5 days, 5 din, has moved in a range of just 300 points, up, down, sideways. But the range for the Nifty in last 5 days, it has just been 300 points. Yes, boys and girls, ladies and gentlemen, 300 points on index, which is almost at 20,000. You got to ask yourself why. So if Nifty is not going to be in this permanent range, can it break out? For it to break out, what could be the trigger? I don't know. For it to come down, could there be a step back coming from global macros? And now that we've heard from Reliance, we've heard from Tata Motors, we've heard from banks, what really could be the trigger? Now let's introduce the seasonality, the month of August. The month of August has been not all that brutal, but has been slightly trendless. 6 out of 10 times markets have gone higher, the average move is nothing. So August is not supposed to be a month where you see historical moves. So you add that with global, look at the Nifty range, FI selling, and the month of August, you would say, okay.
Yeah, no fireworks as such which are expected in the month of August.
Which is great news. If you consolidate in this range, with a 3-4% band on the Nifty, a 4-5% band on the mid cap index, maybe 7 to 10% in the small cap index, and you don't go down like a thud, I think that is victory for the bull. So if markets consolidate in the month of August, which is what they're doing, you should be more happy than rather than feeling left out.
Okay, so I need to feel quite pleased by the fact that you're seeing a bit of consolidation trend, and that is likely to continue. Let's talk about important events and cues that the markets will be reading into in today's trading session. And on top of mind is definitely going to be the auto sales numbers. Yes, it's the start of a brand new month, the 1st of August. And well, to put it mildly, if you look at categories across the board, it's going to be in the slow lane this time around. So across the board, whether it's PVs, tepid demand, CVs, seasonal weakness, two-wheelers, delayed festive season, or even tractors, inventory build-up, attributed to whatever factors, it is going to be a bit of a bumpy ride for the entire auto sector. And you've also got the metals basket, Nikunj, that will be in focus.
It's an interplay of what is happening in the global market, frankly, Avan, that commodity prices, they hunt together. It's rare that orange tomato prices goes up and rest of the vegetable prices don't go up. There's an odd year where orange juice prices will go up or coffee prices will go up. But in general, commodity as a basket, it always goes together. And if energy complex is going higher, is there case for metals to do well? I think there is. There is a view that China is going to improve. The PMI data is suggesting that. There is definitely a view that things are looking up in terms of what the internal demand structure for the developed market also is. And I think some of the metal stocks will be in a good spot, largely because of the how the demand in a sense has really emerged from China. So I will not be surprised that in the near term there could be a trade, and it could be a tactical trade, at least in some of the steel stocks. There could be a tactical trade in some of the metal stocks. Now, you don't buy metal stocks forever. You only trade in metal stocks. So I will not be surprised that commodity-dominated pockets would be fine. And I think it is evident in the way why just metals? I mean, look at ONGC. It's moving higher. You look at even names like GAIL, they are actually moving higher. So anything which has got to do with resource, or anything which has got to do with a global interplay or a play on the reversal in terms of commodities, I think that could be a neat trade. It's a trade, and I'm going to use the word neat trade for the short term.
Okay, this might be a tactical trade for